Hello traders, Gary Wagner here, just about 11:30 in Honolulu, 4:30 in New York. It is Wednesday, November 28th, 2016, and this is the Daily Report for Gold and Silver. Even with a stronger dollar, precious metals, well, specifically gold and silver, managed to eke out modest gains today, with platinum and palladium trading lower. First to gold. It is going to close up about $5, $4.60, about a 0.4% increase at 1143.40, with a low of 1137 and a high of 1145. So we are certainly getting that contraction of range today due to volume and liquidity really drying up as traders square position and close them out for the end of the year. Silver doing quite well today, up about 0.6% at 1608, with a low of 1586 and a high of 1614. As I said, that is all in light of a strong dollar. Dollar continuing to surge, up about 1/3% at 103.29. So traders, as we get closer and closer to the conclusion of 2016 and begin 2017, I want to take a look at the dollar, because the dollar has been so strong of recent. We've seen it hit these tops. This, of course, is simply a daily candlestick chart, but we've seen these tops right at around 103.61. You can see these multiple highs, but still on a technical basis, to really find resistance, we've got to move from a daily pretty much to a monthly chart to be able to put all of the data points in to actually see where that would line up. And let me go get my pointer. And what you'll see is we haven't seen the dollar have this kind of strength really since about 2002. We've got to go all the way back here. This here is 2002, and I believe that this month on a monthly is December. So we are certainly seeing a high of the dollar, but the one thing that I have said on multiple occasions, and that is, don't count this dollar strength out just yet, because the simple truth of the matter is, on a technical basis, we're comparing current dollar strength to a price when the dollar was absolutely in a free fall. So I believe that we still have at least till 105 on a technical basis, and that is really based upon this high node here. And so even with that dollar strength, we have seen the precious metals, specifically gold and silver, find some support from the recent lows that we have seen and have traded off of those lows. Now, we're looking at a very, very long-term chart. This chart is a weekly chart, and it really gives us a broad stroke picture of not only the major rally that occurred from 2008 up until 2011, and the subsequent decline that really culminated at the beginning of this year, but also activity that we have seen this market trade in this year. And this year really has been characterized with having one real major rally and one real major decline. The major rally was really somewhat of an A-B-C scenario, and I believe that that completed this intermediate A. I believe that we are currently in an intermediate B, and we are concluding that B, and from there we'll go into a C. And typically your B wave, in other words, you'll get your A wave up. Your B wave will typically go anywhere between 50 and 75% that of the A wave. And so the fact of the matter is, we have a 75 and a 78% retracement area right here, and we can certainly see, in fact, let me go ahead and put the 75% retracement up, which traders I have just done, and let's go ahead and uncompress this chart so you can see literally how close we have come. And the fact of the matter is that the one thing that I really truly believe will come out of next month's presidential inauguration is quite a bit of uncertainty. And it is uncertainty that certainly could fuel a rally in the precious metals, specifically the safe haven aspect of gold. And so here you can see we have one major rally. This rally begins approximately 1040, 1050, culminates at 1080. We have had this wave down, And if we take a look at the 75% retracement of the rally, that's this dashed black line right here, you can see it comes in at around 1123, and it precisely matches up with the low that we had 3 weeks ago, these being weekly bars. 78 is going to be our low end, and that's really a retracement point, but 75 is something that we use as a model. So the market, this B wave, should culminate somewhere between 1209, and it certainly barreled through there, and 1123, and that happens to be where we have the lows. It is for that reason, on a technical basis, that I believe that there is an increasingly probable opportunity that will become present as this market bottoms and begins to move up. Because traders, here's the key. If this model holds any kind of weight whatsoever, what we would be looking at would be a C wave that would take out the highs that were achieved during the A wave. So you would get something like an A, or B. Let's assume for a second that this is the conclusion of B, and then C. C would have to take us well above these highs at 1380. And that is really a potential that could unfold next year, and this is part of the research that we're putting into our year-end forecast to forecast 2017. And I really believe that there is a strong potential that we'll see a major rally next year simply based upon this model, and then looking at the fundamental factors that currently exist in which we have an untested president that could certainly do as much good as harm, or as much harm as good. But he is certainly has the ability to do either, depending on his actions. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.